Energy stocks have crushed the S&P 500 this year in a good way, and Wall Street is betting the sector's outperformance will persist in the new year. Yahoo Finance's Alexandra Semenova has the story for us. Alexandra.
Well, guys, oil prices have been on a downtrend recently, but that isn't swaying the energy bulls. Energy stocks are poised to charge higher next year, according to much of Wall Street, and that's thanks to relatively cheap valuations and earnings estimates that appear to be a bright spot in an otherwise grim outlook for S&P 500 earnings next year more broadly. Energy has the lowest price-to-earnings ratio of any sector in the index, and it's actually only one of two sectors in the S&P 500 that has recently seen upward revisions to its earnings expectations, while Wall Street is slashing earnings expectations across the board for every other sector. Another point that really underscores Wall Street's bullishness is, according to FactSet data, energy stocks have the highest share of buy ratings, about 63%. Strategists have also pointed out how prudent energy companies have been this year, even against a backdrop of higher oil prices and bullishness around oil. And this year's performance alone is enough to be bullish going into next year. Not only has energy surged more than 55% year to date, but it has no competition compared to the other sectors. It's the only one that is not in negative this year, while the broader benchmark index is down roughly 17% year to date. And this will mark the second year that energy has outperformed the broader market, and next year could be the third.
And we've also talked to some strategists about how the energy companies, which used to spend sort of like crazy, are not spending quite as much, even as prices are pushing higher. That could be something that could be helpful.
Mm-hmm. So there are two sides to the equation here, it appears. It seems like most strategists have two different perspectives. On one hand, Wall Street does expect oil prices to be higher. Goldman sees Brent averaging $98 a barrel next year and WTI crude averaging about $92 a barrel in 2023. That's lower than previous estimates, but meaningfully higher than where it's trading right now. So there is the expectation that higher oil prices will continue to boost the sector. But on the other side, there are some strategists who point out that the comparisons between oil as a commodity and oil stocks are actually a bit misplaced, because when it comes to the companies, you're looking at how they're spending, you're looking at their valuations and earnings per share estimates. Evercore's Julian Emanuel actually recently pointed out on the show that WTI crude oil went negative in 2020, and the sector still outperformed by a long shot.
Appreciate you watching, Alexandra Semenova. Thanks so much.
Always watching.
Great analysis. We'll see you later.